All right, closing entries. This is our post-closing. We're going to get to our post-closing trial balance. In order to get there, we have to do these closing entries. We're going to close out our temporary accounts. So if you remember, our temporary accounts are income statement accounts, revenues, and expenses. And then we don't want to forget about dividends. So dividends is that special one that we'd also want to zero out and start fresh for the next year. We just want to keep track of all the earnings that we're distributing out to the stockholders every year. So we want to zero it out so we can have that organized as well. So revenue, expenses, and dividends are going to be closed out. In order to keep us organized and make sure that we do tie to the income statements amount, we'll close revenue and expenses out to this new account called income summary. So that's right here. I made a T account already for that one. So you're going to have to make one for years because that's a new account, and it's just to keep you organized. It's a temporary account as well, and it'll get closed out. In the real world, some businesses might not use that, and if you're using something like QuickBooks, it does it automatic for closing entries. So it might be a little different, but we're going to go with the textbook that we are learning from, and so that we're going to use that income summary T account. Okay. So let's close out service revenue first. So we're going to close out our revenues first. So we can see here we have 33,000. So I'm right up here looking at my revenue T account. Let's get rid of that one so you can follow me. We have 33,000 and 4,500 for our revenue credit side. Yeah, it makes sense. So that total, if we were totaling that in our heads, 33,000 plus 4,500, that's 37,500. So I need to close out that credit balance of 37,500. How am I going to close that out? How am I going to get this to be a zero here? Well, I'm going to do an entry that's going to have a debit to service revenue for the total of 37. Come on. 37,500. I don't know why it's being weird for me. Maybe because my left hand hit something. Okay, so 37,500. That is my closing entry one. All right. So I have a debit. I'm not a balance. I gotta have something else. I gotta have a credit. Well, we're gonna send it over to income summary, that new account we created to keep us organized. And so that will be our other side. All right, so that is our first closing entry. Let's just try. I'll try to change colors. I don't know if you'll see them all, but we might as well try. Okay, so I did my first closing entries of revenues. Now I'm going to close out my expenses. Well, let's start with supplies expense since that one's right below service revenue. So we have supplies expense that has a debit balance and I need to close it out. So I'm going to do a credit. So here you go. That's how I get it to be zero on that side, by doing a closing entry for a credit. All right, let's do that to all the expenses, add them up, and then we'll get a grand total for income summary, okay? That way we're not listing them all individually. Let's just get a grand total for income summary. All right, so that's the next one. Okay, salaries expense. Well, okay, so that's 31,800 and 1,400. Add that up, that's 33,200. I'm sure if I make a math error, someone's going to message me and tell me, or just laugh at me. So 33,200, that makes that be a zero now. And then depreciation expense building. That makes that zero. All right, so it looks like I have 4 credits to close out my debit balances of expenses. Makes sense. So 4 credits, all those added up. Oh, I guess I need a calculator for that one. Get a calculator. Okay, so we have 33,200 plus 7,000. What else do we got here? 2,700. I'm sure my math whizzes out there could do this in their head. All right, 44,400. That's my 4 credits added up. I need a debit. So we're going to do a debit to income summary for 44,400. All right, so let's go ahead and do that. And that is my closing entry 2. Okay, so income summary has a debit balance of 44,400. That's all my expenses added up. And then a credit balance for 37,500. That's my revenue. Oh, okay. So what does this tell me? Well, my revenue is less than my expenses. What do I have? I have a loss. All right, so I have a net loss. So I'm going to go look at my income statement, double check. Does my income statement say I have net loss? Yeah. And what's the difference? Well, 44,400 minus 37,500. That difference is 6,900. And so I must have a loss for 6,900 on the income statement. Double check, make sure that's true. Okay, it is. I double checked. We don't have an income statement here, but we're going to pretend. And so now we're going to do closing entry number 3. So let's get a different color. Now let's make it look festive. Let's do a green as well. All these colors. All right. So we want to make this be a 0. All right. How are we going to do that? Well, I need 6,900 on that side. So that's my closing entry 3. All right. So I have a credit for 6,900. All right, now I need a debit. What am I going to close my revenues and expenses out to? I'm really technically closing, yeah, I closed them out to income summary, but I'm technically closing that all out to my retained earnings. So keep track of my earnings. Unfortunately, in this case, we had a loss. So if it was net income, it would be obviously a credit increase there. But in this case, it is a loss, so it's going to decrease my retained earnings. So yeah, that makes sense. I did a credit here, and so I need a debit, and that makes sense because it is decreasing my retained earnings. That's a loss. So if it was net income, it would be the opposite of this, but in this case, we have a loss. So we're doing an example problem with a loss since it's a little different. All right, that's closing entry number 3. Okay, so we're almost done. There's one more T account there that we want to close out. That's temporary, and that's dividends. So let's do another color. Let's see what we got here. I don't know, orange. There we go. And so dividends, they have a balance of, I forget, let's go look, 14,000. So I need to close out dividends for 14,000. So that's my last closing entry number 4. All right, that's a 1. Oh, I'm getting sloppy here. Okay, and so we'll have that debit. Now that makes sense because that's giving the share of those earnings to the stockholders. And so, of course, that would increase retained earnings because that's not staying, like the word sounds, retaining within the company, it's going out. So that would decrease. So our loss decreased retained earnings, and our dividends decreases retained earnings. So my ending balance for retained earnings is 49,000 minus 6,900 minus 14,000, and that is 28,100. Right, so that's a ending retained earnings balance. Cool. So we can see here that dividends is zeroed out, right? They're zeroed out. Expenses zeroed out. Expenses, this temporary account, and my revenue. All of them are zeroed out. They're all rolled up into our main one, retained earnings. So we closed out all our temporary accounts. Cool. Well, I did T accounts for this. This all needs to be converted to journal entries. So we got that. We closed revenues first. So let's go back and look. We had a debit to service revenue to close out that credit balance. And then we did a credit to income summary. So let's go ahead and type that in. I'm going to type that because I'm sure you can see how sloppy I am on writing. I better type it so you can actually read what I have. So this is just recapping what we just did and putting it in the actual journal entry format. I like to learn with T accounts first because it keeps me organized, and then I can see what my debits and credits are. So I can go back and look. All right, an income summary. See, that's the red there, the 37,500 above. All right, and then if you were writing a description, it'd be something like the closed revenues. All right, cool. Next we have is closing out all our expenses. So we had 4 expense accounts that we needed to close out, and then we did a debit right here, up here, the income summary for 44,400. Debits go first. So let's go ahead and write that income summary one in first. All right, and then now we need to have some credits. Those are all our expenses. So we have supplies expense, depreciation expense, salaries, and depreciation expense building. So let's go ahead and write those all out. So to close out that debit balance, we needed the credit. Makes sense now. Supplies. Looks like I spelled that wrong. It's mad at me. Cool. Those are all our expenses. I would double check. I'm paranoid. I would say, okay, bring up your calculator, add your 4 credits, make sure you actually yield that debit. So you make sure you got everybody in good. All right, all 4 of these. All right, and that was to close expenses. You know, if you need a description in there, which in the real world, yeah, you're gonna write descriptions, but sometimes your homework says, you don't need to do them. But there you go, just in case. All right, now we need to close out income summary because I said that was a temporary account too. And you can see here, we closed it out. All right, so let's go ahead and record that. So that would be a 6,900 that we need to record for income summary for that credit to get it to be zeroed out. So let's go ahead, pull that down. Oh, I said that was a credit. So we can skip the line. We know credits go not first. We have to do debits first. Well, what was our debit? Oh, that was retained earnings. So let's go back up and see that since I went out of order. There's my other one, my debit to retain earnings. That's where we're closing revenues and expenses out to retain earnings. Almost done. Let's just, I don't know, close out income summary. Looks like I've been doing to close. Let's be consistent. All right. And then finally, close out dividends. Okay, let's close out dividends. Dividends was 14,000. We did a credit to close it out, and then we did a debit to retain earnings. So our return earnings account is going to be first again because we want to record debits first. That was 14,000 and dividends. And then description to close dividends. Sounds good to me. Perfect. We did our journal entries. That's everybody. Those all these accounts. I organized them with sloppy writing, but organize them this way by zeroing out my T accounts, and then I use them to help me do my journal entries. Okay, so that's how I like to do them in that order. Sometimes your book wants you to do this first and then do the T accounts, but I like to handwrite them out that way. And then we said ending retained earnings. Oh, I did that already. We did that up here. That's why I like those T accounts. We had a beginning balance of 49,000. We closed out basically revenues and expenses, right? We closed them out. They netted to 6,900 for loss. All right. And then we also closed out dividends to retain earnings. And so 49,000 minus 6,900 minus 14,000 gave me an ending balance of 28,100. So that's all you're doing. Just saying, okay, 28,100. And if I were to say, and I'm in the new year now, what is my beginning balance of my retained earnings? Well, my ending balance from the prior year is now my beginning balance. All right, for concept checked. So that was a more lengthy video, but hopefully that helps you.